Welcome to Every Dollar Counts with Josh and Jay, a weekly shot of truth serum for your investment insurance questions. I am Josh Null, the owner of Gulf Coast Financial Advisors, and I'm joined today by Mr. Jay Stubbs, Regional Director of First Protective. We are brought to you on the Prime Capital Advisors Podcast Network. Today we have a very special guest, Krystal Sears of Azalea Administration. Krystal is going to break down all the things that you need to know when you're providing a retirement plan to your company. What is benchmarking? What is a TPA? All kinds of good nerdy stuff. But before we dive into this, let's have our friends from local band Sloth Racer kick us off. Jay, how you doing today?
Man, I am hot. It is summertime. It is hot, but we're having fun. My kids got a new GoPro. They've been using that in the pool and the water. They're making videos, but it's just I'm enjoying life right now. I'm enjoying everything. How about you, Josh?
Very good. And waiting for the kids to get back to school.
No kidding, right?
Well, let's welcome our guest, Krystal Sears. Krystal, why don't you tell everybody who you are, what you do, and let's dive into that.
Okay, my name's Krystal Sears. I'm with a third-party administration firm here in Mobile. Our name is Azalea Administration, and we set up 401k plans for employers. So these are employer-sponsored 401k plans. And an employer can be anyone from one participant or one employee to 3,000 employees. It just depends, and from $1 to 40, 50 million, whatever you've got, we'll take it.
Very good. Well, we're going to break this thing down from the beginning. So because we're doing this show not only for other people in our industry, but we're also doing it for business owners, consumers, clients, things like that. So first thing is, what's a TPA?
A TPA is a third-party administrator, which means we are contracted with the record keepers and providers, and we work very closely with financial advisors and CPAs to bring what we do to the client, which is I tell them we want to do everything for you.
So a client, you said that could be a one person, that could be multiple. I know this is probably something you've got a lot of different clients. Anybody listening, if they're a business owner, they consider themselves a client, whether they're one or 1,000.
Absolutely.
Well, okay, so why is a TPA important?
Okay, a TPA is important because we want to keep you compliant with the IRS and the Department of Labor. So we want to make sure that, let us do what we do and let us do that for you and keep those people out of your books and let us get into them.
Very good. Has that changed over the years? I mean, has it become more and more of a bullseye for compliance?
Not necessarily, more or less the rules. And, I like to say you definitely have a lot more flexibility now than you did 40 years ago when the 401k started.
People that are looking at doing a 401k, it sounds simple, shouldn't be that hard to put together, but can you walk people through how you actually assemble a 401k at a small business?
Yes, absolutely. Call your financial advisor.
That sounds like Jay's answer. I like that.
Call your advisor. Definitely consult with your CPA. If you're making money and you're a business owner, you need a 401k. Definitely save what you can, while you can save it. I'm a fan of these. I highly recommend it. If you don't have one, ask about it, look at it, Google it, ask your advisor. And definitely don't try to do it on your own. Like, I tell people that all the time because I see so many people, the one in, I'd say 1 in 1,000, do it on their own and end up successful with it.
Right.
But hire an advisor. I mean, you're going to see the benefits. I don't care if don't think about the fees that you're going to pay them because your returns are going to make up for it. Your returns are definitely going to be there. Let somebody that knows what they're doing, that knows the investments they're looking at, do this for you, and it's going to pay off.
Very good.
Because I want the deduction. I want the deduction because of the contribution, and I want that tax deferred growth. I can't say tax-free growth, but that 401k is going to grow tax deferred for the next 10, 15, 20, 30 years. And when I hit age 59 and a half, I can start drawing on that 401k. And I'm going to pay some taxes on it, but all of the tax-free growth or tax deferred growth I've had is what makes it attractive.
Absolutely. Definitely. And you're definitely going to be further than you were 10 or 15 years from now than you were if you had not done it.
That's right.
So,
Well, I think a lot of people, small business owners, Jay and I deal with them throughout Baldwin and Mobile County and along the Gulf Coast. And a lot of times you hear the biggest hesitation of getting into a 401k is, well, it seems complicated. I'm worried about exposing myself to risk. How do you answer those things when people bring those things up?
absolutely, you're going to be exposed to risk.
Okay.
You're investing. I mean, it's the number one rule. Don't put it all in one investment. Diversify. Have other things besides just your 401k, but definitely have a 401k. I mean, you're going to see it. There's so much potential. There's so many benefits. The benefits definitely outweigh any cons that there are. Everyone that I know, 10 or 15 years from now, they are definitely thankful that they did this.
So I am celebrating 20 years in the business, Josh, and one of the things that I was told to do 20 years ago, I worked for a fairly large company, was at the 6 months mark, start making your contribution and having that money come out of your paycheck, and then the company's going to match it. And it's nice to see that over that 20-year time frame, there's a nice little nugget of money in there.
Definitely. And that money is, you're getting earnings, you're tax deferring that income. There's so many different things that you're doing that's going to get you to that level where you want to be.
So those are the reasons to do it from an individual perspective. From a business owner perspective, what do you think are some great reasons to offer some type of retirement plan?
To offer the retirement plan to your employees, I would say, you're going to get employee retention. I just talked to a staffing company, last week, and they said we've got more jobs than we can fill, than we have applicants. It's a competitive market out there. If you don't have one, you are down on the list. If, someone that's looking at you for a job, you want to offer one. And not only that, if the company can afford it, you want to match it. You got to put some kind of incentive in there. There's so many different ways to do it, and that's where we get into plan design and designing the right plan for the right employer. But, always offer it. There's a lot of, neat things you can do. You can put a vesting schedule on certain things that can help you hold your employees. I've seen a lot more flexibility with eligibility, which means people are starting to, because of healthcare, and so many companies, have to offer a healthcare plan now. A lot of people are going to the 90-day eligibility and syncing it with their healthcare benefits and putting it together. And I'll be honest with you, I say within 10 years, we're going to be at auto enroll. I think the whole country is going to be at auto enroll.
Okay, what does that mean?
That means where you are required, when you go to work for any company, you are required to put a percentage of your paycheck into that plan. Now, hopefully they're matching it, and we definitely want to push that, and we want to encourage that. But with Social Security the way it is, and the way things are looking, I definitely think within the next 10 years, I think there could be a possibility where auto enrollment is a requirement on 401k plans.
Very good. What's your thoughts on that, Jay?
Well, I'm just hearing you, Krystal. So if I'm working with a TPA, if I'm working with your TPA, and I've got questions on plan design, is that where we sit down with you and you say, here's all the different things that we could consider for your plan?
Absolutely. And whatever your plan is now, it may be time to change it. This may be a good time to look at it. Maybe your workforce has changed. Maybe you went from 20 employees to 50 employees. Maybe you went from 50 to 10. So many different things are changing. Maybe you have bought out other companies. Maybe you are going to sell your company. Whatever is changing, always talk about plan design. Talk about it with your TPA, your financial advisor, whoever you have that can help you make those decisions.
Well, I also know from working with you that you do more things than 401k. What are some other services that you all provide at Azalea?
401k is the majority of what we do in plan design, but we also do defined benefit plans and cash balance plans, and those are a type of qualified plan. Now, a lot of people, cash balance is sometimes what you're hearing, but a cash balance plan is just a type of defined benefit plan. It's pretty much the same thing. There's a couple of differences. It's very simple, whichever one is right for you.
Right.
So we have people listening that might have practices. They might have a law firm. They might have a dental practice, an orthodontic practice, a medical practice. They look at a 401k plan, but they also can install these cash balance plans. You see a combination there?
Yes, certainly. You always want to, 99% of the time, you want to combine a defined benefit or a cash balance plan with your existing 401k plan, or you want to, when you set up, maybe you're new, setting up a 401k plan for the first time, and it may be something that you do at the same time. It just depends.
Well, I just wanted to make sure that you tell us, it's okay to do both of those at the same time. Yeah.
Yes, certainly.
So I in these discussions, Jay and I have done quite a few marketing videos. I usually play the guy off the street because I play him pretty well. So for the guy off the street,
You look like a guy off the street.
I was thinking that too.
So for a guy off the street walking down the road, what is the difference between defined benefit, defined contribution?
Okay.
And this is for both you and Jay, because Jay deals a lot with this side.
I'll let Krystal answer. She's the specialist in the room.
I'll answer, and then I'll let Jay answer and see how we differ. So a defined contribution is where you're putting the money into the plan, and your account balance is your account balance. It is carried. You put in $10,000. If it's earned $100, you've got $10,100. It is defined. You know what it is. A defined benefit plan is we have an actuary involved. There's some formulas there, and it is a defined benefit based on when your retirement date is. It is also based on the funding levels that you're putting into it, and there's a lot of factors that go into it. But it's more considered a type of a benefit versus an account. But it's still an account. It's still cash. I mean, there's still money in it. And that is something, too, that everyone needs to understand, that a defined contribution and a defined benefit plan, these are liquid assets. So this is something that you can sell in the market and take a check.
Absolutely.
It is not something that you have to wait weeks. Nothing against real estate, but you're not going to list it on the market and have to wait on it to sell. This is a liquid asset.
Each of those types of plans have underlying investments, underlying sub-accounts, or if you will, like a fund or what have you, that the money is invested in.
Yes. Yes, absolutely. And that's where you guys come in.
That's right.
Because that's where you talk to the client about what to invest in and how to invest and what your risk tolerance is and where you want to be and what age you want to retire at and how long do you want to do this. So many questions that get into that determine that outcome.
Totally agree. Jay, you got anything?
No, I just want to make sure that I've known Krystal for years and her firm. For those listening, how do we get in touch with you? And then how far away from the Mobile Baldwin County market do you serve? Where are your clients and how do people track you down?
Right. Well, we have the good old website, and then Google, of course. Any type of LinkedIn, those, and I'll tell you, 99% of our business is referral based. Every call that I get and every referral I get is because someone has sent them to us.
That's how I found you.
Yeah. So right. It's a small, there's not a lot of TPAs, and, there's a lot of good TPAs. There's a few bad ones, and, that's with any industry. One bad one can give us all a bad name.
Amen.
But there are a lot of good TPAs and a lot of people that spend a lot of time doing this. This is the only thing I've ever done in my life, in my career, college to this. And so I don't know anything else. This is what I've always done.
So I don't have to be physically located in Mobile or Baldwin County to do business with you?
No. Back to answer your question, we have clients in probably 20, 30 states, all over the place, even Puerto Rico.
Wow.
And that gets complicated.
I bet it does. Typically, you work with financial advisors. That's your main source of contact when designing these plans?
Mm-hmm. Yes, the referrals come from financial advisors, wholesalers for the record keepers, which is just some, familiar ones would be like John Hancock, Mass Mutual, Principal, American Funds, some of those. There's so many different ones, and we work with all of them. So the referrals come, and the CPAs. CPAs are a big referral source for us because they're the ones that are seeing how much the client is paying in taxes. Like when you've got a big tax bill at the end of the year and you have no retirement and no savings, guess what? They're calling.
That's right.
And you're thankful that they're calling.
Yes, absolutely. We want them. We're here to help you. We're here to help you, get to that retirement income level that you want to be at, and also to help you defer it, save taxes. We want to put every penny in your pocket that is possible.
Well, and I want to give you a particular shout out to the advisors that listen to the show. I think you're kind of an ace in the sleeve for landing certain deals. I mean, you've been very instrumental in helping us on a takeover opportunity, and I didn't realize I had those kind of tools to pull on out there. So
Yeah, I tell advisors now, hey, if I'm coming to the table, I'm bringing paperwork and we're signing.
Yeah, that's right. I
I
love it.
like that.
I'm not coming back again.
Very good. All right. So another show in the can. I want to shout out to Deep Fried Studios. Shout out to Jay Stubbs, always bringing it. Shout out to our very special guest, Mrs. Krystal Sears of Azalea Administration. I'm going to spell that. Azalea.
You got it.
Got it.
That's right.
And shout out to all of you that have joined Jay and I on the journey so far, and those of you that are joining us now moving forward. Got a question for the show? Reach out to us. You'll find a link in the show notes to contact us. Do you like the show? Do me a favor. Please subscribe on the Apple Podcast app or wherever you find your favorite podcasts. And while you're there, you would be doing us a huge favor if you would rate and review the show. It helps other listeners like you find us. Until next time, have a great week, and thank you, Krystal, for joining us.
Thank you.
Lastly, you like the show music? Go check out slothracerband.com. That's slothracerband.com. And they're going to take us home now. Advisory services offered through Prime Capital Investment Advisors, LLC, PCIA, a federally registered investment advisor. PCIA, doing business as Prime Capital Wealth Management, PCWM, and Qualified Plan Advisors, QPA. Securities offered through Private Client Services, PCS, member FINRA, and SIPC. Gulf Coast Financial Advisors is independent of Prime Capital Advisors. Information presented is for educational purposes only, is not an offer or solicitation for the sale or purchase of any securities. All investments involve risk, and unless otherwise stated, be sure to consult a tax professional before implementing any tax or investment strategies.